Hello, everybody, and thank you for tuning in to the Liberty Report. With me today is Chris Rossini, our co-host. Chris, welcome to the program.
Good morning, Dr. Paul. Great to be with you again.
Good, and we're going to be talking about our favorite subject, and that is monetary policy and those individuals who claim they know how to manage the whole economy if they would only be allowed to do what they want with the money. But they are allowed to do what they want with the money, and it's a disaster. But they are not going to take the blame. They have to blame somebody else. But Powell gave a speech recently, and it was filled with reassurances and everything was going to be fine, but he also had some fair warnings in there. And if you read it carefully enough, I think the American people in the financial markets better not just be reassured that he's going to bail everybody out, even if it goes to zero rate, negative rates of interest. He does not have the ability, and nobody does, to actually save this economy long term. Yes, it one day at a time. Today it might go up, the next day down, but long term there's no way they can salvage this, because in order to salvage what we have, we'd have to cut spending in Washington so that there's no strong need to monetize debt, and for a lot of other reasons. The pressure to keep the stock market up. The president likes that too, trying to prevent a recession that's already in the making because of the malinvestment and the interest rate manipulation over the past months and years. So the recession is guaranteed. When and how deep it'll be and how long it'll last depends on government policy. But we're taking the position that when they say that, yes, we might have to do A, B, and C, but don't worry, everything is fine. So what do you think? Do you think everything is fine, and should we believe this Federal Reserve? Or do you think that our advice ought to be people ought to operate with a bit of caution?
I would go with the latter, Dr. Paul, because if there's one thing about the Federal Reserve is they will never, ever warn of any recessions or depressions. It's always blue skies for the Fed. They're never going to say, okay, everyone protect yourself, sell now, because we're heading down. They'll never expect that, because they'll never do it. Because to them, it really doesn't matter. When the recession comes, they always claim, oh, we never saw it. We have no idea. And nobody's going to challenge them. Who's going to challenge them? The media? So for them, it really doesn't matter up or down. And when things go down, they also have it set up to where they can claim to be the saviors. Okay, we're going to come and save you now. So there's no upside for the Federal Reserve to ever tell the truth from their perspective. So we should never expect it. And you know, if we wanted to really live by the truth, we would listen to what Dr. Paul has said for all of these decades. We would end the Fed.
Chris, there's no doubt about the problems are going to exist. And you know, this past week to 10 days ago, something did happen which was very dramatic, and that was the overnight rate, the amount of money they needed to borrow to buy back their stock. The repo rate skyrocketed. The Fed wants to keep that repo rate around 2%, you know, like the Fed funds rate. And generally they can do this when things are calm. But all of a sudden, you know, this rate skyrocketed. It went to 9 to 10%, and everybody was shook. But what happened was the market all of a sudden gained traction, and there was a shortage of money. I always get a big kick out of this. If prices are rising too fast, they never say, well, it's the Fed's fault. There's not enough money. We can't afford the prices. This is more or less the same thing. They need the money to repurchase the securities that they loaned out to get some money. So they do this, and they all of a sudden there was a shortage. So they say there's a shortage, but don't sweat it. The Fed came to the rescue, and they all of a sudden started pumping it in. And every day since then, they have pumped some in, which is into the system, and they're buying securities. But they said, this is not QE. Of course, they're willing to go up to $75 billion a day, and they've been doing 30 and 40 and $50 billion a day just to keep this going and to keep the interest rates artificially low. And I keep thinking, I wonder if they worry about the people who get sucked in with this policy the Fed teaches everybody and what our schools teach us. Debts aren't too bad, except for the people who overextend themselves. And they have too many credit cards and too much debt, and their rates are not 2 and 3%. And if the credit card company pumps it up to 15 or 20, nobody comes to their rescue. So it's a system very biased and very, very dangerous, because this is what the socialists latch onto. See what capitalism does? They gouge you and you suffer. We have to have total control. Well, total control in this country right now is just look at in certain areas of our economy. And one in monetary policy and interest rates control and the business cycle, and they don't do a very good job. They do a lousy job. And they build into it. People say, well, how do you know for sure there's a recession coming? Well, I think with certainty, past history tells us this, and the understanding of inflation, that is the appreciation of money, the lower interest rates, the malinvestment, and causing people to do the wrong thing. And then it's excessive. And the big one is excessive debt. Even though debt in governments they don't worry about because they just print money, it is significant because it's a burden. Even though the government just prints more money to pay off the debt, we're running a debt now, a deficit of $1 trillion. And they cannot allow the interest rates to go up. So they have this concoction that the world has already introduced this notion that 1% is way too high. It has to be negative. So the lower the interest rates, the higher the cost. So bonds, which is a larger market than the stocks, is tremendously inflated. But I think the stocks are inflated too, and I think a lot of other things are inflated. But the big inflation from all that we have done and the Fed has done recently has inflated the bond market. And that's what's happening here. And it cannot be maintained other than just giving, printing more money and supporting everything. And there's a tremendous amount of pressure, of course, on keeping the stocks up. And the president participates in this. If somebody asks me, well, you and the president should get along good, he's always criticizing the Fed. I said, yeah, that's okay. He's okay on criticizing the Fed, but he's criticizing the Fed for exactly the opposite reason that we criticize the Fed. You know, we say they're doing too much too often and they've caused the problem. And he said, I want more. We deserve to have the best interest rates ever and the best monetary system ever and the biggest spending ever. And of course, that's where the problem is. But Chris, I believe that ultimately all their mischief and all their great wisdom will fail because the market is very, very powerful. And the markets will overrule. But in the meantime, there's going to be a lot of this going on. And I've said it many times, I think the greatest danger for what's been going on and what the Fed does and what the Congress does is that it allows the socialists to come out in the open. Used to be there were socialists always around, but they wouldn't say they're a socialist. Now they do, because they say, look at this system. Look at what it's doing. Look how unfair it is. And the sad part is, Chris, is it is unfair. But it's not because we didn't have forced redistribution and higher taxes and more regulation. It's literally the opposite reason. There's been way too much, and we have this artificial monkey business in our monetary system, which has brought us to this brink.
Right, Dr. Paul. And Powell, it's funny because he's denying they're really doing QE. He just doesn't want to call it that. And I have a quote. He said, this is not QE. In no sense is this QE. This is nothing like it at all. But you know what? If you're adding hundreds of billions of dollars back to your balance sheet, which is what you did during QE, then it's QE. But, you know, we live in a very bizarre time where the political classes believe that whatever they say is the truth. And, you know, whether it's the world is going to end in 12 years or we'll never be socialist, even though we have the biggest socialist programs probably in the world. And this habit of thinking that if you just say something, it's the truth, it's trickled down into our culture. We see it in culture too. People think that if I say it, this is the truth. So, you know, that's what Powell's doing here. He's denying that they're doing QE, even though they are. But it really doesn't matter whether he denies it or not. The same economic disaster is still approaching, and it really doesn't matter what he says. So we have to head towards the truth. Hopefully, where we could help people to see that.
You know, and I think your point is well taken, because what we're trying to do is point out the truth about fiat money. Fiat money is fake money. It's a lie, but people have to be convinced of it. You know, and up until 1971, our country always at least paid token attention to the definition of money, and that it had to have a definition. And that is to be able to define the unit of account, because it measures everything economically. But since 1971, essentially the world, there's nobody in the world now, prices things in an honest unit of account. So it's all based on a lie. It's fiat money, and that is a lie, and therefore they have more room to steal, because they are a regulator, they are a taxing authority, they are a political instrument. This Federal Reserve creates money for the welfare state, creates the money for the warfare state, and it serves all kinds of special interests, but it's very divisive, because no matter how hard they try, and I'm sure a lot of them think they can try through regulation and taxation and the welfare state to redistribute the wealth in a better manner, but they can't do that. The typical thing that happens with monetary inflation, prices do go up, but you don't know when, where, or how much. And sometimes one thing goes up and other things don't go up. But the one pretty firm rule is that prices will go up and difficulties will be much worse, much more than wages. Wages never keep up with the cost of living, and that's where the resentment is, and that is because they don't have a definition of what money is all about. And for this reason, I'm not very optimistic. I'm optimistic, Chris, only when we get to talk with our friends and visit with our supporters through this program, that there are people out there that understand it. So if we don't think we can change the system, and I quite frankly don't think that we're all of a sudden going to get the wisdom in Washington. So my idea is that knowing what's going on, the most you can do is understand it, study monetary policy, and study why we are so negative on the Federal Reserve, and also understand economics, and also protect yourself. And there are ways that have been done, but my idea of protecting oneself is always, ultimately, whether you have monetary protection or physical protection, ultimately it's the preservation of a free society and protecting our liberty, because I believe if all the wealth was confiscated tomorrow but we had true liberty, the American people and the people of the world would rebuild rather quickly.
Boy, that's the truth, Dr. Paul. And I'll finish by saying that, listen to what Dr. Paul has said over the years, that we really have to rethink what the role of government is. We listen to the politicians and these central planners at the Fed. They're always monitoring this, monitoring that, and they're going to act appropriately, as if the economy and people are machines. When you have a machine, you can monitor it. And if a screw gets loose, you tighten it. Or if a part wears out, you replace it. But humans are not machines that you can just socially engineer. We think, we value, we believe things, we learn. And no one can run this or run the economy, or even the biggest delusion of them all, run the world. So this doesn't just apply to the Fed, it applies to the big tech companies in Silicon Valley, it applies to the progressives, to the socialists. Man is free, that is our nature, and there's no changing it. And if that's our nature, then we believe that the ideas of liberty are the way to go, and that's how that we can live together in peace and prosperity.
Very, very good, Chris. And I want to follow up on one point that you had made earlier about QE, that we really are back in it, and refresh people's memory of what happened in '09. The balance sheet had $0.87 trillion, $870 billion, which sounds like a lot of money, but it was peanuts, because when the panic came and they had to bail out all the trillions of dollars, they took it and created money out of thin air and bailed out the mortgage companies, and the balance sheet soared to over $4.5 trillion. They pretended they were going to back off. They backed off a little bit, but even recently they've given up on that. Not only they have given up on backing off on the size of the balance sheet, which they think, well, we have to be prepared on what we can do, and if that balance sheet is too high, we won't have the tools to save the people from this recession, and we don't know where that came from, but we need this ability. Well, they caved in. The president won that fight, the political fight, and they quit shrinking the balance sheet, and they came back in now already. One panic on interest rates popping up for overnight, and they came back. I want to read one quote from this recent speech of Powell's because it goes along with this, but I think it tells us expected to come. You know, even though they talk about everything is going to be okay and we don't have to be really inflating again. This is not QE, but just listen to what Powell said. Increasing the supply of reserves or even maintaining a given letter over time requires us to increase the size of our balance sheet. As we indicated in our March statement on balance sheet normalization, that's a big deal. At some point, we will begin increasing our security holdings to maintain the appropriate level of reserves. And only they know what the appropriate level is. And then he concludes that little paragraph by saying, that time is now upon us. And you know, and the markets go up and say they hear something positive and trades doing one thing, but this is where the essence of the problem comes. It's in monetary policy, and then that invites trade discrepancies and trade imbalances and currency imbalances that are symptoms, and then you have to have regulations for that. Then you have the tariffs and the trade wars to go on, and then you still have to face up to the big thing. The big thing that this creates is unpayable debt. And individuals know what that's like. Corporations know what it's like, and they can go broke. But governments, especially a government like ours that has the reserve currency, we don't go broke. The dollar goes broke, and that's what we're working on. Yes, they're going to bail out everybody. There's going to be another QE. I think we're in it's not quite the amounts that they did back before, but they will increase it. They thought this was temporary. They thought one night or two would take care of this, and the market would take over, and things would be okay. But even today as we speak, there was a little bleep again. They needed more money to tide the repo market over. So the problem is there. We know where it comes from. It's a philosophy of money. It's a philosophy of government. What should the role of government be? And you know, it's not like we're inventing something new. The founders understood this. They did not authorize the central bank. They said only gold and silver could be legal tender. They had no authorization for us to police the world. There was no constitutional authorization to have a welfare state, and yet it's just runaway. So it's major. There will be no gradual elimination of what we have. It will go suddenly, just like the interest rates last week went from 2 to 10. Well, then they're going to break loose, and they're not going to be able to control it. And then the purchasing power of the dollar goes down. And then it will be mandatory that we have monetary reform. Let's just hope that the monetary theorists who want more of this as a solution, let's just hope there's enough people around, and they're not in our universities, but they're out there. There's people studying Austrian economics. You take an institute like the Mises Institute, they've been teaching this, and they've been teaching hundreds and hundreds of individuals. So the information is there. Monetary policy is better understood today than it was even with the founders, and they knew what was going on, and they didn't like debt. So we know what we should do. We know where the problem came from. All we have to do is convince the people it's in their best interest. Go with liberty and go with sound money. I want to thank everybody for tuning in today to the Liberty Report. Please come back soon.